Most new investors don't know where to invest their money, where to start. One of the ways that I tell everyone that they should start is with index funds or ETFs. So let me tell you what they are. Index funds or ETFs is a collection of stocks that were put into a package ready for you to buy. So one of the examples I give is the S&P 500, for example. This is an index of the 500 best companies in the stock market. And when one company is not performing as well, they take a better company and they include it in the index, and they take the companies that are not performing well and they remove them from this index. So you can actually buy a whole package of companies in one of these called ETFs or index funds. So let me teach you a little bit about investing in index funds. So let's see what is an index fund, what are the pros and the cons of an index fund, differences between index funds and ETFs, and how to invest in them. So like I mentioned, there are different index funds. One of them is the S&P 500. So these 500 companies are always mentioned when they talk about the stock market. So how these 500 companies behave, that's how the stock market is being measured. So if the stock market goes up 5%, the S&P 500 most likely is going to go up 5%. If the stock market goes down 5%, the S&P 500 also goes down 5%. And there are different indices. So we have the Dow Jones and we also have the Nasdaq, but there are so many, and some of them specialize in a specific industry. This means that if you want to become the next Warren Buffett, you probably might not want to invest in an index fund or an ETF, because these investments, they actually follow the S&P 500 or the index in the stock market in general. But if you listen to a lot of the interviews from Warren Buffett, one of the things that he's always suggesting is, if you want to make it easy, not having to worry so much, just invest in an index. One of the great things of investing on an index fund or an ETF is that you don't have to think or do anything. You just buy it and let it grow and hold it for years to come. You don't have to worry about what you need to sell or what you need to buy, or what is the economy doing, what is happening in the stock market or in the world. And you don't have to be thinking about what the news are saying about the stock market. You just buy and hold forever. So this is the big difference between picking stocks, because when you pick stocks, you need to be aware of what's going on with this company. Is the company growing? Is the company having issues? Or are the companies really performing according to their price in their stock? But one of the good advantages of picking stocks is that you can actually perform better than an index, even though a lot of the professionals cannot actually outperform the indexes, which is very interesting. One of the great things about index funds and ETFs is the diversification, because you don't have to worry about one company. So if one of the 500 companies of the S&P 500 actually crashes and collapses and declare bankruptcy, there are another 499 companies that could be doing fine. So you will not suffer as much impact than if you are the owner of that company that actually collapsed. So by choosing a basket of companies, you actually balance the risk and spread it along all these companies that you are investing on. So just to review, what are some of the benefits of investing in index funds or ETFs is that you can do passive investing, so you don't have to worry about it. Dependable returns, which we know that S&P 500 returns around 10% per year on average. And you have diversification. And some of the drawbacks is that you cannot outperform the stock market. So the stock market is the benchmark for this type of investing. You don't have as much flexibility, and you can make a lot of errors. So to end this video, let me give you some more information about the difference between index fund and ETFs. and I will give you my opinions at the end of this video about all this information. And before we start with this description, let me answer two questions. The question number one is, how much money do you need to start investing in index funds, ETFs, or any stocks? And the answer is that you can start with very little money. Many of these brokers actually allow you to buy fractional shares, which is that you can buy a fraction of your stock. So if you're buying a stock that is $500, but you only have $100, you can actually buy $100 worth of that stock. But if the stock moves up 50%, you can actually make 50% of those $100 that you just invested. And the second question is, how many ETFs or index funds should I own? And the answer is one or two, in my opinion. Because if you have diversification, where you have a basket of all these stocks, you really don't need to buy so many because your money is already diversified, and now you have a basket of many stocks that are selling products and services to all their customers. So there is no a right way to invest in the stock market. You can successfully pick your own stocks, you can invest in index funds, or you can invest in ETFs, or you can do a combination of both. I recommend you to choose the best for you, so you can better find the answer of what is the best option for you. I am going to explain now what is the difference between ETFs and index funds. An ETF is an exchange-traded fund, where one fund buys all the stocks in the S&P 500, they put it in an account where people buy little pieces of this fund every day. And this ETF, like the S&P 500, let's think about you have a whole basket of eggs. And these eggs are all the 500 best companies in the stock market. So when you buy an ETF, you're buying a little piece of ownership of that basket of eggs. Or you can also sell that little piece of ownership of that basket of eggs. So it is a whole basket that is distributed and traded every single day in and out, but the basket's still the same, and it changes very little. So let's say you, me, my brother, my sister, my aunt, and my grandmother, we all decide to put money together, and we buy so many stocks from the stock market. So let's say my sister wants to be out of the deal, so in order to do this, we need to sell a portion of our investments to give my sister the money back. That's how an index fund actually works. So an index fund is a collection of investments, while the ETF is a collection of securities that are traded between so many people that buy and sell ownership in this basket of securities. That is the whole difference. But there are a lot of similarities. Some of them are both index funds and ETFs offer you a low-cost solution and a proven track record. Since both of them are actually invested, for example, in the S&P 500, they are going to behave exactly like the S&P 500. So there are not many differences between the two. So they both have diversification, and in my opinion, they will be a very good option for someone who is starting with this investing journey. So to end this video with my personal opinion is that this is a great way to invest. And most people, they cannot move forward in life and reach financial independence because they never start investing. And investing is as easy as you can see on this video. Anyone can start investing, and the earliest you can start, the better. Something you have seen in my channel is this compound interest calculator. If you invest $200 a month, which is $2,400 a year, and let's say you start at age 25 and invest for 40 years in an index like the S&P 500 that returns on average 10% per year, this means that you can retire with over $1 million at age of 65. And this is how easy investing could be. This also means that for so many years, you're only investing $200. So imagine if you increase that amount, the amount of years that you can accomplish this continues to be reduced year after year. And this is all thanks to the compound interest, which is your best friend in this journey of investing. So what are your thoughts about all this information? I am going to create more educational videos that you can continue your journey of learning about investing. My purpose is that you become successful in this investing journey and you can reach financial independence. If you want to see how I am investing $250 every single week in a brand new account that will teach you what would I do if I had to start all over again from zero, I am going to share with you my VIP club. You will see how I invest my own money so you can learn. I want to thank you for watching all this video to the end. I am so confident that you're going to have a great investing journey and that you're going to accomplish all your goals. Please share this video with people who want to succeed as much as you do.